When you look at the markets and when you look at exactly what they're pricing in, what is the focus on? Is it on stimulus? Is it on the election? Is it on COVID? Is it on almost too many things for them to actually, get it right?
I think the general focus of markets, given that we're near the all-time highs on stocks and we're at reasonably tight levels on credit spreads, is that the expansion is going to continue and there won't be any big policy mistakes. And that's probably a bit too optimistic, especially when you watch how the fiscal discussions are going on in the U.S. So I do think there are some risks of this rally stalling simply because of the inability of Congress to come to a quick conclusion on stimulus. But until we actually see the key macro indicators start to buckle, I think markets are going to stay quite elevated. It's very hard to fight the momentum in the macro data, and that momentum is pretty powerful right now.
So, John, what do treasuries do from here?
I think Treasury is going to edge up because we are going to see a continued lift in inflation, reversing some of the decline that we saw in inflation in the spring. But for the most part, I think your rise in yields is maybe limited to another 25 basis points from here on 10-year rates. Keep in mind that even as inflation starts to normalize from the depressed levels in the spring, it's still going to be in a very low range for the next couple of years at least because of high unemployment and what that does to wage pressures. So if you're going to have wage pressures bearing down on overall levels of inflation, if you're going to have extraordinary monetary stimulus, if you have zero policy rates for the next several years, it really does put a ceiling on rates. I'd say they're going to go no higher than maybe another 25 basis points from current levels through the end of this year.